Welcome to Financial Reporting Conversations, brought to you by Basford Consulting.
We're here to make the unknowns and knowns of accounting, auditing and climate standards known, so you can avoid the blind-threading mistakes and do financial reporting better.
Each episode will unpack what the standards really say, what they mean in practice.
Whether you're a preparer, auditor, director or litigator, our aim is to help you get it right. Hello and Happy New Year everyone. We hope you've had a great break and are ready for the year ahead. In this episode, Wayne and I are going to discuss what we're expecting to be ahead of us for 2026 and our plans at Basford Consulting. So Wayne, let's dive right in. What are your predictions for 2026 for financial reporting?
Happy New Year, Judith. 2026 is going to be an interesting year or a boring year. Who knows? So we can look back, you can replay this tape in 12 months' time and see whether I was going mad or off the mark. From an accounting, auditing perspective, there are no new accounting standards, there are no new auditing standards, and the only thing that we should all be excited about is mandatory climate reporting, is S2. So we're going to see coming out in March, we're going to see the December balances for the tier ones coming out, and then we'll see the big wave of the larger entities coming out for the June balances. So we're going to have climate reporting, mandatory climate reporting with limited assurance. And, you know, am I that excited about it? Not really. You know, and I am the cynic. I lived there in Singapore in Y2K. Everybody had built up to Y2K, the excitement of Y2K. Everybody looked there. Which skyscrapers' lights are going to go down? Is there anybody going to be trapped in lifts? Is climate reporting going to be exciting? Are we going to see analysts' reports come out on climate reporting? Are share prices going to fall? There's going to be headlines in the Fin Review, headlines in the Financial Times? I'm not sure there is. You know, are there going to be qualifications? And if there are, does anybody care? Are there going to be risks that nobody realised, that we're worried that our major companies are going to be traumatised by climate and transition risk? No. You know, it's yes, we've got a committee, we're looking at it, we're monitoring it. For the larger entities, we've got targets or we've not got targets. And I doubt whether it's going to be exciting. There is, you know, one of the positive things, me being positive, I do think it might prevent greenwashing. But remember, this is not a sustainability report. This is a climate statement. So that's the headline. 2026 is climate reporting, mandatory climate reporting in Australia, but I'm not convinced it's going to be exciting.
It'll certainly be interesting to see how detailed, how specific each the big entities, big end of town will report, because one of the things that I think ASIC has said was reviewing like voluntary climate disclosures, that disclosures were sort of quite vague rather than being quite specific. So that'll be interesting to see.
For everybody, it's going to be interesting to watch, because as at the moment, a lot of these big companies have already had very glossy, very polished sustainability reports. They do their best. Now, people are now going to get confused or hived out, and everybody, I'm a sustainability champion, there's going to be sustainability reporting in Australia. No, there's not. There's going to be climate reporting in Australia, and S2 only applies to climate greenhouse gas reporting. So what are the risks of transition or physical risks that they're going to disclose? And it's going to be very, very interesting to see what those are going to be. You know, we think our mine's going to close because it's going to get hot. We think we will have to switch to hydrogen, solar. I don't think that risk is going to be there, you know, and they're going to be, what opportunities are people going to be talking about from climate? Now, I know all the consulting firms, potentially us. I can talk about the opportunity of are we all going to get a really good templates to copy from the large boys, and this is how they put their climate together? We're going to get clarity on scenario analysis. And, it's really weird. Just accept if we meet the targets, which we won't, the real modelling is going to be enormous carbon pricing and enormous restrictions on energy in order to force everybody to meet the targets. Now, that's going to be an interesting one to say, if you do take this seriously, if we do try and meet the targets, there's going to be an amazing economic impact. But if we just let the climate go up, well, there's far less economic. So it's going to be interesting to read, and hopefully a lot of these people that are saying S2 is going to save the planet. S2, the accountants are doing their bit to save the planet. Good old bean counters, we have finally saved the planet. I don't think that's what we're going to see when we get to climate reporting. But I might be an old cynic.
Let's move on to what about accounting? I mean, obviously a lot of attention is on climate, and anything happening exciting from an accounting perspective that we can expect?
From an accounting perspective, we've got the big thing that auditors, audit committee chairs, finance directors should be aware of is ASIC. If ASIC stick with the announcements they made towards the end of last year, ASIC are going to be far more active. ASIC are going to ask a lot more questions of accounts, of auditors. And they've got this great position and correct position they look at a set of accounts that they don't like, and then they go and look at the audit file. Or they look at an audit file and discover they don't like the set of accounts. And this is my prediction for 2026. And if it doesn't happen in 2026, it will happen in 2027. And if it doesn't happen then, it will happen in 2028. Australia will finally adopt AASB 15. Australia will finally adopt IFRS 15. ASIC, hopefully, will make the right inquiries, will look at revenue recognition, will ask questions on revenue recognition, will actually say, well, how does this comply with the 5-step approach? You appear to recognise revenue based on you raise an invoice, and you, the auditor, seems to audit the revenue by checking there was an invoice raised. You seem to be recognising revenue based on the pricing schedule in Appendix A of the sales agreement. How does that in any way match up with step 2 of IFRS 15? How does it any way match up with step 4 of IFRS 15? So ASIC are changing their approach, are becoming much more interested. They appear in audit quality, and I'm looking at them, seeing them correctly. They're asking a lot more questions about revenue rec.
When you certainly helped, going back to the point about looking at like a set of accounts and asking questions and asking audit questions, you've also certainly helped some of our clients who are audit firms dealing with ASIC on those issues. So we've got first-hand experience.
I am seeing lots of nervous and disturbed audit partners because they're having questions from ASIC. You're an audit partner, you've got a business to run, you've got audits to do, clients to keep happy, and now you've got questions, interesting questions, concerning questions from ASIC. And these questions from ASIC, you look in the papers, ASIC are taking auditors to court. ASIC are not just now taking to the CADB, ASIC are taking auditors to court, and your name, your reputation is in the fin, is in the business news. Going back, this ASIC are correctly asking questions about ASQ and 1. How we think there's a problem there. We think you didn't get this sufficient appropriate audit evidence. We think you were not skeptical. We don't think the evidence you got there was appropriate. When you go, maybe. But then they are correctly, how did that happen? How under ASQM1 did this quality failure happen? What is wrong with your ASQM1 process? Is now not being viewed as an isolated issue. It's that partner on that job with that manager and that file. It's how did it happen in your quality management system? And when you look at the quality management systems, ultimately the person responsible for quality management is the managing partner, is the head of audit. So the drive for quality, which we obviously support, it's going to happen this year. So it is a very interesting area for us all to look at, and that's going to drive quality. It's going to, for us, I promise you, we are going to be dealing with a lot of queries that have been really started by an ASIC question.
Yeah, definitely. And going back to your point about revenue and AASB 15, like another area that ASIC sort of looked into, you're starting to already look into, is the principal versus agent. Because I think they're really coming into that, because that could make your financial statements, your P&L look, the grossing up or versus net or gross looks quite different in terms of the top revenue line, whether you're a principal or agent.
I in a very, very strange way, I'm still in 2001, I'm still in 2002. So back in 2001, 2002, I was into US GAAP. I was a US GAAP desk in one of the big four, and everything was about revenue recognition. And at the time, the SEC were having enormous restatements, and there's another restatement, and these were enormous restatements. And you know what the restatements were about? Predominantly, it was agent versus principal. So the SEC had looked at a set of a big number set of accounts and had said, we think by the hundreds of millions, revenue is wrong. And there's an enormous headline, X big company Inc. has overstated its revenue by hundreds of millions. And it wasn't the profit, it was the revenue. And all of those restatements in 01, 02, 03 were about agent versus principal. Now, IFRS 15 comes along, exactly the same as US GAAP, exactly the same as Topic 606. And remarkably in Australia, nothing happens with agent versus principal. And nobody worries about agent versus principal. Nobody's talking about agent versus principal. And now, what are we, 8 years on from the introduction of IFRS 15? You're right. Agent versus principal. Finally, Australia will be catching up. And I hate to say this, catching up with where the US were on revenue, maybe, back at the turn of the century.
Yeah, and it is like, Wayne and I, we've dealt with a couple of these issues, and it's very judgmental and very facts and circumstances based. And yeah, and the standard sometimes might be counterintuitive to what people think.
There are amazing questions, and I'm looking at a file now, and who's the customer? Who are you selling to? And I know the cash flows this way, and I know that flows that way. But as I'm talking to the auditor, who's the customer? And you're the auditor. You should actually know who the customer is. What's the service? What I'm providing, and it can get into a very uncomfortable. Well, of course that's the customer. Why? I don't think we're not providing the service. We're just actually earning commission from arranging A and B getting together, And it's a real question of who's really paying for that service. Is it the real end customer, or is it actually the entity that's providing the service? And yeah, you know the debates that we're starting to get, but it's an upward curve. Now, those debates should have been had when we were adopting IFRS 15, but now 2025, 2026, we're finally having the debates on agent versus principal. And if you get it wrong, you can wipe out your revenue. And the headline that will be in the fin is, you've overstated your revenue by 200% or what ridiculous numbers, or X 100 million. Yeah. And there's a good chance your share price will fall, even though your bottom line doesn't move at all. But your growth, your targets, your strength, your balance sheet, you're not quite as big as people were interpreting from your accounts.
Yeah. And anything else you want to talk about? Yeah. Any predictions?
Going away from the interesting thing of revenue and well, almost possibly related to revenue, continuing with the predictions for 2026. Has anybody noticed just how high the price of gold and silver is? And sitting here in Western Australia, people have started to notice how high the price of gold and silver is. And there's a rush for cash, right? There's going to be an amazing rush of people trying to get the gold and the silver out of the ground. That they're got mothballed projects, they've got old projects, they've got prospective projects, and there's going to be a lot of real effort to get that dirt into mills, into the mint. So there's some very interesting arrangements, joint venture arrangements, mining licenses, funding arrangements, with all interesting things. That's hopefully, business is key. Turn dirt into cash is the aim. But from us, the accounting aspect of how these smaller capped gold, silver explorers, or in a number of cases, buying distressed assets. So they're not, there's a lot of entities that are not even really exploring. They know the mine's been there for 100 years, but now the gold price, the silver price has never been at these prices. So we've got a plan to get the gold, the silver out of that mine. And that's going to be for us, for the Western Australians. It's going to be an interesting time of quite interesting accounting.
Yeah, I'm certainly looking forward to looking at some interesting funding agreements under 9. And also,
the convertible notes with warrants, the potential streaming arrangements, the renegotiating all the convertible notes when the production doesn't quite happen as to plan, because, by the way, production tends to get delayed in these matters. So for us, being you, Judith, the nuances of convertible notes and reading convertible notes is going to get interesting. But I think you're also going to be getting into joint ventures and control. And have we lost control of a subsidiary? And what is actually in the tenement, the mine, actually sits in an entity. They typically don't sit within the holding company. They sit within a subsidiary. We acquired a subsidiary that had got an asset. You're then into, and you'll be dealing with IFRS 10, you're then into what is the relevant activity of that subsidiary. Me going into this offtake agreement, me going into this joint arrangement, have I lost control of that entity? And a lot of these questions are going to be, have you flicked a subsidiary into a JV? And, flicking a subsidiary into a JV is interesting. You've got to revalue it. You've got to fair value your interest in that subsidiary into a JV. And then, unfortunately for everybody that people will hate, you then equity account that gold. So if you're not careful, you're going to end up not having revenue. You're just going to end up having profit, equity accounted profit. Now that your accounts do not look nice if you just get equity accounted profit. Your accounts, we've got into production and there's all this revenue, and we will be dealing with losing control, JVs, convertible notes, failing fixed for fixed. When do we recognise revenue? What is the revenue? It's going to be interesting times.
Yeah, just a thought popped up. That would be interesting when AASB 18 comes along, when, income from investments in JVs and equity accounting would not be part of your operating profit.
It's always been a question anyway, so you're right. IFRS 18 comes along, no, equity accounted profit is not part of my operating profit. So it's going to be disappointing. But to be honest, the nightmare of having no revenue, where are you directing your investors' attention? Now, you EBITDA, the sustained profit, where in the P&L do you tend to draw people's attention? In reality, you tend to draw your attention to revenue. Revenue has gone up by this. Revenue's up 20%. Revenue's up 50%. Sustained year-on-year revenue growth. You end up with the equity accounting. It's never been a pleasant place to go. And
we might be helping some clients acquiring a gold mine, and whether it's mothball, we've done a few of these acquisitions, and AASB 3, whether it's an asset or a business, comes in.
What's the stage of that mine? Is it an asset? Is it a business? Massive difference in whether we're applying AASB 3 or whether we're applying AASB 116. And this concentration test, what exactly have you acquired? What assets? Can you move the assets? Yes, I acquired a mine. Yes, but what did you acquire? I acquired all these dozers, all this movable kit. So what do you intend doing with that? Oh, I'm going to sell it. I'm going to use it. I'm going to do something with it. It's the concentration test gets more and more difficult to apply when you actually understand you've bought loads of stuff other than the mining right, or other than the fixtures and fittings, the plant and machinery attached to the mine.
That's right. We've certainly seen cases where the same vendor was selling two mines, and one ended up being an asset acquisition and the other one was a business combination, because they had all these trucks and move machineries on the ground.
And it's going to be how quick, and a lot of it's how quickly can you get into production. And a lot of these things, your aim, and it can all go wrong, but your aim is to get this into production very, very quickly. So you've got inputs, you've got processes, and you are desperate to turn it into output. So you're then into some very interesting accounting in terms of AASB 3, not least because we flick into your world of, if you've got contingent consideration, deferred consideration, it's a financial instrument that has to be recognised as a financial instrument, not just as a contingent liability, not as an executory contract, so that the accounting can look very interesting. And remember, all of these acquisitions, they've got financial instruments, convertible notes. One of the things I haven't seen in the last couple of years, but I'm sure they're about to happen, are streams. So, I will give you $1 million for all of the silver rights in that gold project, or all of the silver in that zinc project. So streaming is there, and that's a very interesting area of accounting.
If you're finding this discussion useful, please take a moment to click like, subscribe, and share. It helps others in the financial reporting community discover financial reporting conversations and keeps you up to date with every new episode. So Wayne, we've talked about your predictions on 2026, about climate reporting. We've talked about auditing ASIC being quite active now, and we talked about the implications of how the gold and silver price being so high. What are our plans at Basford Consulting to support our clients in 2026? What's your world domination plan for?
Travel strategy. Judith, this is what we are going to do in 2026. There's going to be continuing the push on training. So continuing the push on training and the online training. So plans there are, we're going to issue some training materials for lawyers, particularly those involved in either side of the litigation, defending preparers and auditors or litigating against them. So there's going to be watch out for a whole new series of this is what a lawyer needs to know about financial reporting. This is what a lawyer needs to know about auditors. There's going to be a series that we're going to deliberately develop trying to explain accounting and auditing, and by the way, they'll be very similar to the lawyer version, for audit committees and audit committee chairs. This is the questions. If you're looking at a set of accounts, this is the questions. This is why you should ask those questions. This is about linking it onto those fraud ones. This is the fraud triangle. This is the culture you, the audit committee, should be putting in place. These are the questions you should be asking of your external auditor. These are the questions you should be asking in terms of appointing an external auditor. So there's going to be a whole new series of e-training for audit committees, for directors. We ran those whole series of webinars in November, December, the scary ones, how to misstate your financial statements, how to get revenue wrong. And they were fun to do, but I'm still
that was a lot of fun.
Not convinced the live webinars are the way to do. I'm never sure people are really listening at the other end of it. I'm never sure they remember what I said. So I'm turning all of those courses into reusable, rewatchable iSpring courses. So people can say, what was he talking about on step 4? Or what was he talking about on step 2? Replay it. And remember, all these courses from an audit partner, you can actually check whether your staff were paying attention. So you're worried that they weren't. When they attended our webinars, they were looking out the window, they were playing on their phone, they weren't listening to me or you. Well, which, by the way, if I was an audit partner, should be a real worry to you. But you can now get them to sit the iSpring course, and you can see whether they managed to pass the quiz or didn't patch the quiz, didn't pass the quiz. Now that's going to be our training effort, and you have got to launch our dates for we will run webinars in March, April, definitely April, May, to webinars, rerun of some of the ones that we ran back in November, December, but there's going to be new ones as things I'm getting interested in or coming across. We are going to go into quite shortly, and but behind the scenes, I've been looking at this for, I could say, a year. So this will be a really embarrassing one if it doesn't happen in 2026. We are going to go into CFO advisory. So me, you, the team, KJ, and Susan, we don't really do accounting. We tell you there should be a debit, there should be a credit, and you can do the math on the financial instrument, but we don't do bookkeeping. And the more and more we look at people do actually need a service to, can you prepare the accounts for us? Can you take us on an IPO journey? Can you put these 5 entities together and show us what the consolidated thing does? So we will be moving into, not the four of us, we will get somebody else.
That's the consulting few. I'm not sure if I can.
And it's going to be part of it. So it's going to be part of it. It's not going to be a Jetstar. It will be somebody who's very good at putting accounts together, very good at acting as a CFO, but with direct access to us. So that's going to be a launch for 2026, he says, because it was meant to be a launch for 2025. And the other thing that we're getting into is much more ASQ1 support. So there is a need for ASQ1 support, reviewing your quality system, reviewing files, doing a file review. Because, the work I do with all the litigation work, I look at a lot of not so good audit files and write various reports that say this wasn't really complied with auditing standards. Now, that's a useful skill for if you're head of audit and you want somebody to have look at your files with a very critical eye, but looking at where you could get litigated against. I'm obviously quite a good person to do that. But the other one that I'm very keen to push when I say this ASQ1 support is to coach the person that's doing the file review. To actually, I don't want to do that many file reviews if I'm honest. I've seen too many audit files in my life. But me coaching, directing, being the support for somebody that's reviewing an audit file. How do I do it? What do you think? What are the points I've looked for? This is the evidence. What do you think of this evidence? And giving training, this linking to this is the training if you're doing a file review, if you're looking at quality, if you're responsible for an element of the firm's system of quality management, we'll provide the training for those people that are doing it. And there is a hope that we're going to become more international. So, we're at the moment, we're turning our iSpring courses back into IAS. We're turning it back IFRS, into ISAs. So there's a hope that we will be supporting internationally, living in our world of Southeast Asia and love for supporting Singapore, supporting Thailand, maybe supporting Hong Kong, and definitely the potential of supporting the subcontinent. You look at how many outsourced providers are on the subcontinent using companies, supporting companies that use IFRS. So that's the plan for 2026. I'm also got a plan of losing 10 kilos, being healthy. Last year, 2025, I did manage to go and run with the bulls in Pamplona. I'm not quite sure what my mad plan for 2026 is, but as and when I've come up with my really stupid plan of what I'm going to do, apart from losing 10 kilos in this year, I'll let you know and anybody that's listening.
Sure, it'll be very interesting. Well, thanks.
What do you want to get out of 2026? So
I'm certainly looking forward to continue to support our clients and looking for the interesting financial instruments that will be coming ahead. And I'm sure, we'll also be seeing a lot of renegotiations and a lot of spreadsheet work to be done. Just looking forward to helping clients on the accounting journey and interesting accounting issues. I mean, I had a brief look at the IFRIC yesterday, and there are some interesting questions on financial instruments, and apparently there's a amortized cost ED coming up in the second half of the year, so that will be something that I'll be looking at very closely.
I thought you'd be into dynamic hedging or whatever. What's the new phrase for?
Dynamic risk management. Yeah, the ED came out.
I promise you, dynamic risk management. You will be the expert within the firm. It's very unlikely I will add that to my must-do list in 2026.
Yeah, and maybe some PPAs on solar. I had a question the other day on that on the Eastern Seaboard. So that'll be interesting.
We've got crypto and AI. The world is moving at an amazing rate. So I do expect more and more questions on crypto. And the discussion of what it is, and by the way, it's inventory. I do expect more and more questions on carbon credits. I'm remarkably knowledgeable on carbon credits, just because in the last certainly year, 18 months, I get more and more questions on. We've got a business model that we're actually going to generate farm effectively carbon credits or get it via another way. So that's going to be interesting.
Yeah.
Another, my God, I don't know where this is going to end and whether this is a 2026 thing or it's definitely going to be a 27 thing. AI. I am intrigued with how AI is going to impact the audit profession. You read all these stories that the Big Four are investing millions in AI, which and what that's going to mean. Is it going to mean better audits, which it should? Is it going to mean cheaper audits and less staff? You see these predictions that the Big Four is going into, their grad recruitment is lower, and which makes perfect sense. ChatGPT is more knowledgeable than audit than any accounting grad I've ever hired or interviewed. And then you're going to get, where does the accounting profession get its team? Do you need accountants? Is it going to be the case that AI is going to replace my financial controllers, replace the bookkeeper, replace these outsourced accountants in the Philippines or in India? AI is going to be a really interesting thing, and you've got the dynamics of the profession are getting interesting as well. Particularly when you look in the UK, but you can see the trend in the UK moving to Australia. By the number of listed companies audited, not by market cap, the Big Four are almost not in the top 4 anymore. That there's been a massive move that auditing the non-mega companies is moving more and more into the mid-tier. And you can see the growth in partner numbers, audit partner numbers in the mid-tier. And a lot of them, when you read the CVs, I'm looking at LinkedIn constantly. We are pleased to announce the hiring of this partner. And they're ex-Big Four. And this move from auditing in the Big Four across to the mid-tier is an interesting dynamic in the market. And that will be interesting in terms of audit competition, audit pricing. I know one of the things we were talking about was whether we're going to talk about impairment and stress and going concern. Some of this moving a lot of partners into the mid-tier creates a lot of overhead. And you hire a partner, there's a real question about how do you fund that partner and how many staff do you have to hire to get that partner profitable. So completely a weird issue on 2026. Are we going to see continued growth in partner numbers within the mid-tier? And will that lead to financial profitability in the mid-tier, or will that lead to financial stress and de-stress in the mid-tier? Will we see a bloodbath for audit fees? in that space, which will be interesting for us to watch. And if there is a bloodbath for audit fees in that space, how will that impact audit quality? With ASIC looking at it, it's a really weird move, and what can we use with AI and what can we put offshore, and we need to win fees because we've just gone and bought these 3 new partners in. Interesting, the Chinese saying, fortunate are those that live in interesting times. I think we live in interesting times.
So let's wrap up for now. Thanks for joining us for our financial reporting conversations, and we hope today's discussion has helped frame some of the key accounting topics to watch as we move into 2026 and how we'll be supporting our organizations at Basford Consulting. Thank you, everyone, and we'll be back soon.
Thank you, and Happy New Year. Thanks for listening to Financial Reporting Conversations. For guidance on applying accounting and auditing standards or to access our online training programs, please visit basfordconsulting.com.
Don't forget to like, subscribe, and share this episode with your colleagues and contacts. We'll see you next time where we make the unknowns in financial reporting known.